the only reason the stock market has rallied is because the economy is so weak. See, what's driving the stock market rally is the idea that because the economy is so weak, the Fed is going to pivot, that the Fed is not going to keep raising interest rates. It's going to be forced to stop hiking rates and maybe cut rates to stimulate the economy. So the reason the stock market has rallied is because we're in a recession. So it's hard for Biden to kind of point to the stock market as indicative of his success when it actually is indicative of his failure. I'm 59 years old, all right? And I have never in my life heard a recession defined any other way other than 2 negative quarters of GDP. That's the definition, because recession refers to whether or not the GDP is expanding or contracting. It doesn't refer to the level of unemployment or the level of inflation. It specifically is there to reference what is happening with GDP. Right? That's how they define economic growth. I mean, I have a lot of problems with GDP, but that's how recession has been defined. Recovery is when the GDP is expanding. Recession is when it's contracting. That's it. And if you've got 2 negative quarters in a row, you're in a recession. Now, maybe it's a shallow recession. Maybe it's going to be over quickly. Now, I don't think so. I think we're just early in this recession. I think the third quarter is going to be even weaker than the first two. In fact, I think they're going to revise the second quarter number even lower. And I was not surprised by that negative number. I expected it. And in fact, last year, I expected the first quarter to be negative. I was forecasting that the U.S. economy would be in recession in the first half of 2022 back in 2021. And by the way, back in 2021, I was also forecasting that inflation was not transitory and that it would get worse. I said inflation would strengthen and the economy would weaken. We would have stagflation. And that is exactly what we have. And, you know, even Fed Chair Powell, they got to him. They were able to intimidate him. So anybody who thinks the Fed is independent, now you have Chair Powell claiming that 2 negative quarters is not a recession and we're not in a recession. 2 negative quarters is just a minimum for a recession. We're going to get a third negative quarter. We're going to get a fourth negative quarter. We're going to be seeing contracting GDP for years. This recession is just getting started, and the increase in unemployment is coming. People that are pointing to the low unemployment rate and saying this means we're not in recession, that's nonsense. Unemployment is a lagging indicator. The unemployment rate is going to rise as the recession continues. But also, Megan, they're trying to claim that we're not in a recession because we have a strong labor market. We don't. We have a very weak labor market. Real wages are collapsing. Wages have never really fallen this much in real terms in history. That is a weak labor market. When you have a strong labor market, workers can demand raises. They have power. They can go to their bosses and say, I want more money, or I'm going to quit and take another job. That's not happening. Workers are being forced to work for pay cuts. In fact, a lot of workers are taking second jobs and third jobs because they can't make ends meet on their main job. That is a weak labor market. The bear market rally notwithstanding, we're still in a bear market. But, well, first of all, it's not just 20 or 30 years. I mean, it's kind of always been described as 2 consecutive quarters of negative GDP. And we didn't hear differently until about, like less than a week before they released the official numbers for the second quarter. And obviously the Biden administration was leaked that GDP report. They knew in advance that it was going to be negative. And it wasn't until then that they came out with this ridiculous explanation or excuse that 2 negative quarters of GDP do not constitute a recession, because prior to that knowledge, they were pretending we had a strong economy. They kept talking about how strong the economy was. Well, it's been in recession the entire year. I guess they believe if you repeat a lie often enough, people will believe it. But imagine if Donald Trump tried to do the same thing. What if Trump were president and we had 2 quarters of negative GDP growth, and then Donald Trump tried to redefine recession to claim that we were not in one? Do you think the media would go along with that? It is the technical definition. That's the definition. I mean, let's say we had inflation and a strong labor market, which is what they're pretending. If inflation was 9%, workers would be getting 12% pay raises. They would be ahead of inflation. The fact that they're accepting raises that are much smaller than inflation shows that this is a weak labor market. Workers have no power. They are forced to accept lower wages because the labor market is so weak. It is about to rise because, a lot of companies were reluctant to lay people off over the past 6 months. They were hopeful that what they were looking at was a temporary downturn. They were hoping that inflation was transitory, that we would avoid recession, because employers don't want to lay people off. It's expensive. You train people, you invest money in your workers. You don't want to just get rid of them unless you really know you need to. But I think now that the economy is so bad and it's obviously getting worse, I think a lot of these companies that were holding on to their workers, I think they're going to start letting them go. And so you're going to see a big increase in layoffs. We're already seeing that in first-time jobless claims, which are now above 250,000. They actually peaked above 260,000 the prior week. This is the highest since the fall of last year. That's a leading indicator, unlike the unemployment rate, which is a lagging indicator. And the idea that Biden created any jobs, that's ridiculous. He didn't create anything. You basically had a bunch of jobs before he became president where we told all the workers, temporarily leave your job. Go home, don't work. We're going to pay you a bunch of money not to work, so sit at home and stay at home. Now Biden walks into office and now we tell all those workers, hey, the jobs that we told you to leave, you got to go back to them. So people are going back to the jobs they temporarily left, and now Biden is saying, oh, look at me, I created all these jobs. Right. He hasn't created anything. I'm sure if Biden wasn't president, we might have actually created jobs. Instead, because of his policies, we probably have fewer jobs, and the jobs that we have pay less. The wage price spiral is another fiction created by government in the 1970s to try to blame the private sector for the inflation they created. Inflation is not created by workers demanding raises. It's not created by companies raising prices. It's created by the government expanding the money supply. That's the literal definition of inflation. It's an expansion of the money supply. It's the money supply that is being inflated. And when you inflate the money supply, prices go up. Wages are just another price. They are the price of labor. But just because nominal wages go up 5%, if inflation is 9%, that doesn't mean workers are ahead. And in fact, the wage number is likely accurate. The price number is not. The real increase in consumer prices is probably 18%, not 9%. That means real wages are collapsing. And that's one of the reasons that in the most recent economic data that we got last week, the savings rate is now at the lowest level since mid-2009. It collapsed down to 5.1. What was happening to the economy in mid-2009? We were in the Great Recession. So the last time we had a savings rate this low, we were in a huge recession. Why is the savings rate so low? Because the recession is forcing workers to dip into their savings to pay their bills because their pay increases aren't enough. The official unemployment rate is 3.6%. But the unofficial rate is much higher than that because there are a lot of people that are not employed but are not counted as being unemployed. And we still have a very low labor force participation rate. And so I look at that number as kind of being a meaningless lagging indicator.